Okay, welcome back everyone. In this video, I'm going to show you how to write off $1.25 million with Section 179. Now, the top takeaway is that this strategy is all about efficiency. This program is not an expense, this is a discount. This is one example of financial planning based tax mitigation strategy. It's one of about a dozen or so strategies that I use to help high income earners reduce their out of pocket tax liability in order to realize a net savings. In the tax planning world, there are no silver bullets, there is no free lunch. So, your CPA is going to use Section 179 to write off things like vehicles, think trucks, software, machines, equipment, etc. Section 179 allows you to maximize first year deductions. So instead of depreciating the assets over several years, your CPA elects to fully expense the cost in the current tax year. Currently up to 1.25 million, but if the one big beautiful bill passes, it will double to 2.5. And this allows you to offset taxable income. So, example, your business earns $500,000 net profit, buys a truck for $100,000 before December 31st. You get the full $100,000 deduction, reducing your taxable income to $400,000. So compare the two scenarios below, you would save approximately $35,000. Because here, with $500,000 without the deduction, you're paying 27.4 and 7.8 California. Total tax, $176,000. And this is just an example. These are rough estimates. This is not what your exact numbers are going to look like. This is just to prove and show the point. Now, with Section 179, you would take that $100,000 deduction. So now your taxable income is $400,000. So instead of paying $176,000 in taxes, you're paying $140,000 in taxes. However, so you're saving $35,000, which is great, but we could do a lot better. So let's continue. And this is the nice F250, or I think this is an F150. I think that's what I put in there. So here's the catch. Section 179 is powerful, but it is not free money. You still have to spend $1 to save a portion of $1. So what happens if you don't need more stuff? What if another truck doesn't actually grow your business, or you just do not want another payment? Well, that's a dilemma that most business owners run into. At some point, you max out your useful deductions, you've got enough equipment, your home office is set, and the idea of buying something and taking on the monthly payment that comes with it just for the write-off starts to feel like a waste, and that's because it is. And that's where our technology package makes a difference. Yes, you're spending money, but this time it's going towards something that helps grow your business. It'll help you follow up with leads, manage your customers, protect your data, give you access to private AI, and doubles as a tax strategy because you can write off the entire purchase price under Section 179. Now, here's the best part. You're not spending extra money. You're using money that was already going to the IRS. And this isn't an expense, this is a discount because when you spend $1, you can write off 5. So, how to maximize your 179 deductions. Now, this only applies to those already spending $50,000 a year or more in taxes. If you're going to get ERC money and lose wage expense deductions, this will work great for you. And if you have business partners whose cumulative tax liability will be $50,000 or more, you can split up the deduction and each realize a net savings. So the product is an AI-based technology package, hardware plus software, and that is 100% deductible the year it's purchased and put in use under Section 179. It allows you to use the power of AI to keep sensitive data offline, securely manage customer relationships from anywhere, help grow your business, all while creating a net savings. And this technology package will put money back in your pocket. For every dollar spent on this, you will get to write off 5 because of how the financing works. Now, typically when you use Section 179 to buy a truck, you put money down, let's call it 20%, and finance the rest. Then, as we went over, you get to write off the full purchase price of that truck. With this technology package, you can do the same thing, but instead of making monthly payments with cash, you can use loyalty points you earn by being an active member of the technology package company. So these are like store credit. You earn them by being an active member of the technology package, and then you use those points to pay off the note. So here's an example of what it looks like from a cash flow perspective. a savings of $24,289. You spent $100,000, yes, but 144 of your 500,000 profit was already spent in the form of taxes. So instead, you spend 100,000, you pay the unavoidable taxes like payroll, get a $500,000 write-off, and you pocket the difference. In this case, you'd save $24,289. Oops, you can't even see what I'm talking about. In this case, you'd save $24,289. Now, this number is going to be different for pretty much everyone, depending on your state, income, etc. But again, this entire strategy is about efficiency. It's not an expense. It is a discount because the money used as the down payment for the technology package. It is already going to the IRS. So same income, much different outcome. In this case, in about 30 minutes, you put $24,000 back in your pocket. Okay, how the financing work and how the financing and write-off works. So you can pay cash or finance the technology package. Most people are going to finance it. Most people are not. Like, think about heavy equipment. Think about bulldozers. Most people are not purchasing bulldozers in cash. They're going to leverage that, and they're going to put the bank's money to work on purchasing that bulldozer. They're going to put a down payment, and then they're going to finance the rest. So if the purchase price is $500,000, you'll put 20% down, $100,000. You'll finance 80%, $400,000. And then you'll write off $500 under Section 179. And after you put down the $100,000, the remaining $400,000 is financed. But again, you don't make monthly payments like a normal loan. Instead, you earn loyalty points each year and by staying active in the program. Those points can be used to pay down the loan, both the principal and interest, and you can adjust these numbers based off your income all the way up to $1.25 million. It's as simple as that. So if you want to maximize your 179 deductions and save money, like in this example where this individual saved $24,000 in about 30 minutes by purchasing a legitimate technology package that is going to help grow their business, but also help them realize some nice tax savings. And again, not as an expense, but as a discount. Go ahead and check out the link right below this video. There's more information over there for you. Take care. Have a good one. Bye.